How's it going, Jackson? How you doing, buddy? What's happening? You ready to talk about real estate? Should we do it? All right, let's do it.
Good morning, everybody. So let's follow up with yesterday's analysis of Boulder real estate broken out by price tranche with the same analysis for Denver. If you're just catching up with the news this morning, you'll probably see this article from the Denver Post cross your screen pretty soon. And the headline is Hundreds of Metro Denver home sellers yank their listings, and the pandemic causes an unprecedented shift in the housing market. How quickly the world has changed. Jill Schaefer, chair of the Trends Committee for the Denver metro area of Realtors, said in a statement that accompanied their monthly update. And they say hundreds of sellers pulled their listings off the market, thousands went the other way. And open houses are taboo. Shiftings became virtual. All of that is true. Mortgage rates have gyrated up and down. That's true too. And this is the data that I wanted to take a closer look at. And they say 761 listings came off the market. 625 of those were withdrawals in the last 2 weeks. And it's really difficult if you're analyzing and using the MLS to see what happened last year. A certain number of listings come off the market every month, especially if you listed in January and you still haven't been successful in attracting a buyer. So there's always going to be a certain number that come off. And then the article goes, so we can't compare that without knowing the regular number. And it's hard through my access to the MLS to find that data. So I think that it's true, but we don't know how many more than usual. And even with, so this is an interesting statement, even with those concerns, a large number of new listings came on, 30% more than February, and 12% more closings from February, but down 5% from March 2019. But Denver actually is not down. So if you go into InfoSparks, and this is Realtor only access, but they want us to be sharing this data, and you look at Denver and you look at all property types, and you change this to monthly and look at it over whatever time period you want to look at it, you can see that March of 2019, there were 1,138 closings, and then March of 2020, 1,146 closings. And this number is going to go up because it's only April 3rd, and realtors and employing brokers and the data entry people sometimes need a few extra days to get the data in. We're supposed to get it in usually within 24 or 48 hours of the actual closing, but it happens all the time that people remember to put their data in by the end of the week. So that number could go up by a few. In any event, 0.7% increase year over year in the city of Denver, not a decrease. So what does that look like? Let's see if there's anything else in this article that we should mention real quick. 20% increase in inventory and 4 times the usual increase. That's an interesting quote there. 4 times the usual increase between February and March, and the second biggest jump on record for March. So March, of course, is normal for more inventory to come on, but that's a pretty substantial increase. All right, let's look at the same analysis that I did yesterday, but this time for Denver. So these are new listings that came on the market during the last 2 weeks, the last 2 weeks of March. And I looked at attached, detached, and multifamily, the number that were withdrawn, the new listings, and the ones of those new listings that went under contract, so that we could see what percentage of new listings went under contract. So first, the Denver Post is right. 208, so that's hundreds of new listings were withdrawn in Denver. And 284 new attached dwellings, 545 detached dwellings, and 180 multifamily properties came on the market. Of those, 47% of attached dwellings, 54% of detached dwellings, that's single family houses, and 55% of multifamily properties went under contract. So almost 50% across the board, on average more than 50%, 52% of the total of attached, detached, and multifamily went under contract during the last 2 weeks of March. So that certainly is not a panic environment when more than half of new listings are going under contract in the city of Denver. So let's break it out into what it looks like by price range. So this is just like the analysis I did yesterday in Denver. And what you're going to see here is that at the lower end of the market, there's plenty of demand, and the market's absorbing the new inventory that came on rapidly. 12 new listings under 250,000, half of which went under contract. The next price tranche, 250 to 500, 245 new listings came on the market, 60% of which went under contract. 184 new listings in the $500,000 to $750,000 range. 100 of those went under contract, so more than 50%, and so on. Again, the next price tranche, 58% of new listings went under market, and that's where it suddenly shifts. So under $1 million for detached single-family houses in Denver, more than 50% of new inventory went on the market, went under contract, and then it starts to transition. So the market above $1 million in Denver is quite different, as you might imagine, and there was a lot more hesitancy. So 11 new listings for $1 million to $1.25 million, 2 of which went under contract, only 18%, and the next price tranche 1.25 to 1.5, 38%. Still not horrible. So that's more than a third of new listings in this price point. And then we drop to much smaller numbers. And then the 2 million plus is the catch-all for everything. When we look at attached dwellings, we see a very similar pattern. Under 250,000, almost 60% went under contract. There were 69 new listings, plenty of depth of market. 250 to 500,000, 65 new listings went under contract. That's 44% of the market of these new listings went under contract. That's not the whole market, just the new listings. 500 to 750,000, 52 new listings came on the market, 50 new townhomes and condos, 40% were immediately absorbed and went under contract during the last 2 weeks. So you see pretty good strength, above 40%, and then $1 million to 1.25, it starts to drop. You're at 33%, but there were only 3 new listings. So now you've got a sample size problem anyway, but there was definitely at least one buyer willing to jump in on one of these 3 new listings that hit the market. And then there's, you were looking at very small numbers of new listings. So even though 50% of the higher price tranche, 1.5 to 1.75 went under contract, these numbers, when you get to such small samples, I don't have much confidence in. But when you're talking about 50 plus new listings in the 500 to 750,000 range, of which 40% went under contract, I've got a lot of confidence in that. And if you're curious how this all compares to Boulder, you can just, I can just show you quickly. Boulder, same spreadsheet, different data sources, same price tranches. So in the same price tranche, you see a similar pattern, 250 to 500, 60% versus 57%. I would say that's probably within the margin of error. And then Boulder is actually a little bit weaker. So 500 to 750,000. This is Boulder County, keep in mind, the whole county. 30% of new listings went under contract versus 54%. In the next price tranche, 750 to $1 million, 34% went under contract in Boulder County versus 58% in Denver. So in general, it looks like Denver is a little bit more heated. There's maybe more buyer appetite than in Boulder County, although the differences in some cases are small, like here it flips, 1 million to 1.25. A quarter of those new listings went under contract versus 18%. But really, we're talking about the difference of one listing, right? That's one listing is quite random chance. I think these markets are behaving very similarly in general, with lots of price support, lots of buyer support for new inventory coming on the market, even in the midst of the last 2 weeks of coronavirus pandemic. So my sense is, as the new normal is established and we better understand how to do showings and pre-vet buyers, so the sellers that withdrew their listings are probably going to be coming back by summertime. Of course, all of it depends on the macroeconomic situation, and with unprecedented unemployment claims hitting the market, it's possible we're going to see quite a bit of slowdown coming forward. It all depends on what plays out in the next couple of weeks. So stay tuned. We'll keep analyzing the market. We'll keep providing this sort of data analysis. And if you're looking for more, don't hesitate to visit houseeinstein.com. That's our website. And there you'll find a link to sign up for our fresh listings report, which is when we talk about new listings that just hit the market and we analyze what we think are the best ones Usually we're just focusing on Boulder for those, but we may expand to Denver in the future. We do have an agent that specializes in Denver, and she's doing a killer job. She's Sophie. You'll find her at sophie@houseeinstein.com, or her tagline, Homes with Soph. She's all over Instagram, and she's been super busy, so she probably isn't even interested in me giving her a little pitch here, because she's been doing such a great job with this first quarter's market activity and serving her clients. And I hope everyone is well out there. Thanks again for joining me. And that's your quick analysis of what's happening in the Denver real estate market.